Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be talking a little bit about Campbell's soup. So I just ran across this article. A retired couple accidentally donates a soup of basically cash to a food bank. Now, kind of going through the article, this is a fixed income couple. They are retired. They had set aside $2,500 some time ago. They kept it in a secret bank disguised as the Campbell tomato soup, and they had a few hundreds of $50 tucked away in it for over the years. So in my example, I'm going to take Campbell's soup because it's a public traded company. I'm going to take $2,500. I'm going to take the fact that this has been kind of stocked away over the years. So I'm going to say 5 years in my example, and we're going to be talking about how Campbell soup, if you had invested $2,500 into it 5 years ago, where exactly would you be at right now with dividends, with capital appreciation, and so on. So that's what we're going to be covering in this video. Because I ran across this article, I thought that would be kind of a fun topic for today. So we have Campbell's soup here. Back 5 years ago, it was $36.53. It's currently marked at $47.39. That's an increase of roughly 30%. So 29.73%. 30 by 5, that's around 6% average per year. So taking that math, that I just kind of used the bottom point, and I'm going to be using the buying point, and I'm going to be using the current price that it is now, and then I want to take a look at their dividend history. So I went over to dividend.com, and this information up top, it's not really relevant right now. The information I wanted to find was their dividend history. So here we can see back in 2013 they did stop paying out dividends for just a few quarters there. They stopped paying out dividends for 2 quarters, but the remainder of the time they've been paying out dividends very nicely. They did a stock split 2-for-1, continued to raise their dividend, fell in some hard times after that 2K the 2K crash, decided they had to pull back their dividend a little bit there, but they had a stock split 2-for-1, so it was pretty warranted. So that was just kind of like their history there. But let's go back to 2013. So I took this information here and decided to plug that into my graph. So here we have the graph. So we have savings of $2,500 that they had stored away, not invested. It's in a can, so it's not earning any capital appreciation. It's losing value with interest or inflation. So here we use our stock price of 5 years ago of $36.53. With $36.53 for each share going into 2,500, that buys us 68 shares. So the total cost of the trade, or the total equity that we were able to purchase, is $2,484. So we'll say that $10 of that was used for the trading cost, which a lot of times you can get around that these days by trading on Robinhood, Merrill Edge, M1 Finance, you name it. I'm sure there's probably some way you can get rid of the commission cost there. So in 2013, they used their 68 shares, and the dividend that they received that year was 60 cents. I got this by combining 31 cents with 29 cents for a complete dividend that year of just 60 cents. So 60 cents is the very first year that we got paid. We got paid $40.80. So we were able to scruff together a little bit more money, and we were able to buy 2 more shares that year. Now, we came on some hard times. We didn't have any more money to deposit, so we just enabled DRIP and didn't touch the account again. The next year, we have 2014. We're now sitting at 70 shares. They're now paying out $1.24 for the entire year per share. So here, if we get 31 and we multiply that by 4, that gets us our $1.24. If we multiply our current shares by the dividend for the entire year, that gives us roughly $86.80 off our dividends. So that's able to buy us an additional 2 shares at the end of that year. And now we're going into 2015. We're sitting at 72 shares. That's another $1.24 per year off their dividends, because they didn't increase their dividends up until 2016 midway. So here we made another. See, why is my math off a little bit there? Oh, we have more shares, so that's why my math is a little bit higher. Okay, so we increase our payout by roughly $3 just due to those 2 shares. we were able to buy an additional 2 shares. This with drip, you'll probably be able to actually get a little bit more. You'll get some partial shares in there. So these are some rough estimates. 2016 rolls around. Whoops, here we go. 2016 rolls around. We now have 74 shares. They bumped up their dividend mid-year. We're now getting a $1.32 per year, which roughly gets us $97.68. We would again get a little bit more than 2 shares, but for this example, I said we get 2 shares that year. So now rolling into 2017, we have 76 shares. They finally increased their dividend a little bit here. They're paying out 35 cents per share per quarter over 4 quarters. That is $1.40. That gets us $106.40 in dividends. We're able to buy, I put 2 shares here, but we could actually buy 2017 here. Let's look at the prices in 2017. They were trading at $60, so that's why I said about 2 shares, because the stock price does go up. So that's why I kind of continue to say 2 shares throughout the time, because if you take $106, you split it up by 2, and you're going to get that around $60 mark or a little bit in there. So depending on your buying point and the money that you have kind of sitting in the account, you could probably average in around 2 shares during that time. So I said we get another 2 shares at the end of 2017, and now we're rolling into 2018. We have 78 shares of Campbell Soup. We're getting paid $1.40 right now for the entire year per share. So that roughly gets us $109.20 for 2018, unless they increase the price sometime during 2018. So now the stock is currently trading at $47.39. So that was an increase of roughly 30%. We own 78 shares of Campbell Soup, so we have total equity is $3,696.40. Now this is sort of like a rough estimate, because I'm sure we would actually have some more shares somewhere in there. We'd have some partial shares. This doesn't take into effect compounding over quarter to quarter with dividends being reinvested. So we're ending right around $3,700 is our total equity when we started with $2,500 over just a 5-year period. And this stock is actually a pretty slow stock. Again, it doesn't beat the S&P 500 as far as capital gains go, but and it had a couple quarters there where the dividend was cut out. So this is just what time can do with your money if you invest it. Even if you don't choose a winning stock, but you do pick a blue chip company that's out there, pretty well recognized, has some dividends that they pay out, it has some kind of continued growth into it, so you can expect, while it may be sometimes risky to invest in the stock market, there are some good investments you can make that are pretty safe at the end. So this was just an example I used based off the article that I had read here, just with the retired couple accidentally donating a Campbell soup can to the food bank. So that is it for this video. I thought it would be kind of an interesting thing to kind of go over and kind of cover Campbell soup 5 years ago and break out some math here. So that is it for this video. If you are brand new to my channel, I make stock market and investment videos weekly, so do consider subscribing for future videos. I want to thank everyone for watching up to this point. If you did like the video, hit the like button below, subscribe to my channel for for more videos. If you have any questions or want to say hello, please leave a comment below. As a friendly disclaimer, I'm not a financial advisor or tax professional. The information provided is just my opinion for entertainment and fun. This is not investment advice. This is just me, a financial investor, trying to help others make money work for them. So thank you guys for tuning in. I will see you next time. Have a great time. Bye-bye.